We're going to focus our attention south of the border in the U.S. housing market. The supply of existing U.S. homes are at the lowest levels unseen since 2005, according to our next guest. And that means prices are likely to stay high and rise even further. Joining us for more on this is Jeff Taylor, co-founder and managing director of Digital Risk, and he joins us from the NASDAQ. Thanks so much for joining us, Jeff.
Thanks for having me.
So whenever we talk about the U.S. housing market, we always have to benchmark and how that compares to the huge run-up that we saw in 2007. At what levels are we exceeding 2007, and what points do we still have some catching up to do?
Well, I'll tell you what, right now, if we look back at 2007, the inventory is as tight as it has been in 2007, 8 years ago. What's interesting, though, is that the new home builders do still have a great opportunity to pick out pieces of land around the country where jobs are being created and built for that first-time home buyer, which is basically being priced out of the housing market right now when you look at how high rents are and how tight inventories are. So what I'm really looking for in the next couple of years is to start seeing a lot of new homes, multifamily homes being built, targeting that first-time home buyer in and around the areas where they feel like they have job security.
And when you talk about those specific hotspots, what is driving that? You know, I think about during the financial crisis, a lot of Canadians took advantage of those depressed prices and flooded to the U.S. to buy homes on the cheap. Of course, our currency was working a little bit better or more in favor for us. What is the state of the foreign home buyer in the United States?
So I live in Miami, and I'll tell you, 62% of all purchases right now are cash, and probably 47% of those are from the foreign buyers, and that's Latin America, that's Europe, that's Russia. So that's a very big process. You also take a look at like California right now, Orange County, a very huge Japanese, Chinese market is still, it's not as hot as it was a year ago, but it's still a lot of cash buyers in those markets right now. So the international influence in the U.S. in areas like San Francisco, Miami, New York is still very high. But again, if you want to look at the overall health of the housing market, I think that's stabilized in the U.S. There is still room for growth in the mid part of the country, but we'll have to see what interest rates do over the next couple of quarters.
To what extent had that interest rate hike that we got, if I can call it that baby step up in interest rates in the United States, curbed housing activity, if at all?
You know, it's funny. When it first came up, I think people were like, oh my God, interest rates finally rose, let me get back into the market. Unfortunately, or fortunately, with all the market volatility, the 10-year is actually still trading at a point where interest rates for mortgages are a little bit lower than they were before the interest rate hike. So if you're a U.S. home buyer, if you're looking to buy real estate in the U.S., this is a very good time. One other stat that I find it's really interesting, it's a new term called the boomerang buyers. These are about 7 million people who lost their house to foreclosure in that 2007-2008 range. They're expected to buy houses in the next 7 years, with about 1 million of them coming back into that housing market sometime in 2016. Now, they don't have perfect credit, so that's going to give a lot of opportunity for Alt-A type products, or basically products that don't go to Fannie and Freddie, to be bought, and potentially that may kickstart the securitization market a little bit more.
And hopefully it's on a more stable footing than the last time they took on those mortgages.
Absolutely.
For foreign investors interested in the U.S. market, if you had to pick the ones poised for the most upside in terms of price appreciation, what are the markets you're most excited about?
So Dallas, Denver, South Florida, San Francisco, I think those are the big four that are really hot. If I'm looking 5 years out where I can still get a relatively good deal, I may be looking in other parts of Texas, or more in that Midwest geography where there's still some houses that are sort of pre-2007 pricing and are still sort of trying to work their way through the foreclosure areas. So more in that middle part of the country.
Well, it's interesting you mentioned Dallas. What have you seen in kind of those more oil-exposed economies with respect to the housing market?
So in Houston, you've definitely seen a slowdown because so many jobs are dependent upon the oil, and that's kind of slowed down. Dallas is a little bit different. It's about 4 hours away, and that market's about as red hot as any market in the country. And I think the last stats I saw showed about 30,000 people per month moving into the Texas/Dallas Metroplex area. So that continues to be one of the hottest markets in the country right now. So Houston is struggling a little bit. Dallas very hot.
In Canada, in certain regions, if you're a millennial, it is very hard to become a first-time homebuyer because of how high prices are. What is the case in the United States? Are you starting to see more participation from those millennials, those first-time homebuyers?
You know, so the millennials, the first-time home buyer, you like to see that number around 45 or 40. Right now it's still around 30, so it's lower. But the problem is not just the prices, it's that the rents are so high, they're having a very difficult time saving for that down payment. And, you know, the job markets are coming back, so the job markets are feeling better about, but the wages aren't as high as they used to be. So it's still very difficult for those millennials to say, okay, I know exactly where I want to be, location, I'm going to be here for 10 years to make that purchase. So you've got the three factors. You've got basically rents being high, housing prices being high, and affordability with the saving for that down payment.
Jeff, thank you so much for joining us and for this insight.
Thank you for having me.